Thanks for joining us once again. This is Greg. Today we focus on Tesla's stock price just returned above 360, and it's mind-blowing and opposite of what I expected. And we kind of review where we're at uh, initially and then where we think it's going from there. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, like some better ideas on investing and trading, please join us on Patreon. So I we've had a chance to cover Tesla stock price in a bunch of different ways. There's a phenomenon that happens where there's obviously a lot of trading that occurs every day, but as you know, Tesla's stock price has gone from 450 in the last 3 weeks prior to the election all the way down to 315, almost 320 within the last 4 or 5 days, and now it's back to 360. Um, there are a lot of ways you can reference this, and I call it delta. So yes, the stock price is moving around a great deal. Now, I've made an effort to introduce what I call perhaps the perfect trade based on all those activities that are occurring. In particular, what I was fascinated by for trading is that there is, as you know, all kinds of trading. There's some people that are trading the stock for a couple of seconds, a couple of milliseconds, a couple of months, a couple of years. All those numbers are out there. In particular, what I was impressed by as an easy way to make money using options as well as stocks is the fact that something like a third to half of our viewers own Tesla stock. And I think it's a good move, the stock, and it's done well for you, particularly over the last 2 months. Now, the next thing I wanted to review is there's an interesting trade that I have been fascinated by for the last 20 years, and that is I want to call it the beauty trade. And so, what is the beauty trade? Well, think about Tesla's stock price. Prior to their earnings, it was approximately 250. After earnings and the announcement of Mr. Trump's win, we now had a stock price that bounced up, pretty much doubled, and ended up in the $460 range. So the question mark is, what do you do when you have all of that gain? You have obviously three main options. One is to stay where you're at. Another option is to buy more, and the other option is to just sell. I wanted to introduce another option, which is using options to hedge your position. So yes, the stock price is at 350, but if your cost basis is $100 to $200 a share, you have a lot of profit to protect. I might digress here because I'm based in the Washington, D.C. area. In the last 2 weeks, uh, housing prices in Washington, D.C. have fallen by 36%. And this means there are a lot of people who had their homes for a while. They made some money, and they're now giving back that money. I expect it to fall another 10 to 15%, only because we haven't gotten into the main selling season yet. And I think that, by the way, I do have my real estate license, so you guys can give me a shout if you'd like some help in moving some property. So the problem that pops up is, how do you manage potential loss? And in the case of the housing prices, the only option you have is to really sell it. But when it comes to stocks, you can use options to actually hedge away the risk of losing all of your gains or even all of your money. So the perfect trade that I'm arguing here, and I've said this before, is that something in the range of 5 to 10% of your portfolio, possibly 20% if you're rolling with some severe gains, would actually be a wise move. Why is that? Well, it turns out that if you buy those options and you could even take a loan out against your shares, all the expenses related to those options are tax-free. You reduce your tax basis on that. So in essence, what you could do is buy puts on Tesla's stock price at its current level. And there are three things that could happen once you've bought puts or used puts to insure your stocks. Either it could go up, it could stay the same, or it could go down. What's great is that you can deduct the cost of this, and that includes the interest. You can borrow the money needed for this transaction from the shares that you already hold. You're allowed to borrow up to 50% of the value of that stock. And so in essence, you're creating your own insurance policy. So what next is what I think is a likely scenario of what's going to happen over the next few months. But I have to say that to some extent I've been wrong for the last couple of weeks. I predicted last week that we'd see a pullback probably into the high 200s, low 300s of the stock, and it hasn't obviously gotten there yet. My logic behind this obviously is that there's a decline in both revenue and profit for Tesla, even though they're doing fine in terms of other sources of cash, including the EV tax credits that are out there that are coming in from Europe, the United States, for those sellers who are not selling enough EVs. So the next sort of issue to deal with here is the fact that in general, I think we settle out into the $300 a share range over the next few weeks or months. But frankly, there are a lot of variables that could affect it staying the same or rising. One of the variables I'd like to review today that I think plays into this is the fact that, as we've discussed numerous times, Warren Buffett is sitting on about $500 billion in cash, something between 300 and 500 billion. So there are a lot of great investors that have decided to sort of pull back, wait out, see how the Trump administration settles things out, etc. And their pullback has turned out to be actually pretty wise. The market's been volatile, generally down, but it has been moving in every direction, if you will, mostly down. Here's one of the variable that we're seeing that I think is kind of big here, and that is the issue of the pension funds. So there's actually an entity called Calpers, and Calpers is one of the main sort of retirement vehicles for state employees in the state of California. One of the challenges Calpers has is they have a concept called an asset allocation model. What that means is that anytime they're investing their money or investing money on behalf of the folks whose retirement are in there, they give them a lot of options in terms of the ways in which they can choose to save their money. They can do index options. As you know, about 69% of the money is in some kind of index option. And when you do an index, all it means is that, like, the S&P is an index. NASDAQ 100 is an index. There are all these indices that are out there. And so what's actually happening is that you have individuals, in some cases, that just do whatever the fund might tell them to do with their money to save it. But a lot of people will choose to somewhat diversify where they're invested as a way to protect their shares and try to get some gains going forward. And usually folks choose the S&P index as the main vehicle to drive where they invest. There's also a heavy concentration in the NASDAQ and its top stocks, as well as another place that a lot of people invest. It's my belief right now we're in a very interesting zone for Tesla, and that is that as you saw the stock price spike, we actually had an adjustment that went on, meaning that Elon/Tesla's market cap actually rose. With that higher market cap, it meant that it's a higher percentage of the index. So every month as money comes in from retirees who need to manage the safe investment of their money, they're simply buying the S&P or the NASDAQ 100 or other sort of indices out there. But the largest companies, be it NVIDIA, Apple, Tesla, etc., are a disproportionate part of those indices. And so literally what's happening right now is we just transitioned into February. We're heading into March. What actually is happening is that there are large amount of shares in these companies that are being bought by pension funds around the world every month until the rebalancing occurs again. So it's my belief, therefore, that we might actually see continued buying of Tesla even if the stock price is down. Why? Because 69% of the cash that's out there is in retirement funds, and of those funds, the highest percentage, above 60%, are in indices. And therefore, I believe that there can be no good or bad news, or there could be good or bad news that might occur relative to sales, revenue, profit, etc., and it doesn't necessarily affect the stock price decline, especially when we have large numbers of institutional analysts that are upgrading Tesla stock price. So my review of this whole thing is that I do believe anytime you have profit, sales, revenue declining, it usually equals a declining stock price. The problem, though, is that it's a supply and demand issue. If you have increased buying, even if sales, etc., are declining, you might see stock price continue to rise simply because the number of stocks the size of Tesla is limited, and as those institutions have to keep buying, you could see stock prices rising. One other variable I find kind of interesting here that's going on is that there's this phenomenon of there are different types of money managers. So, for example, obviously there are people who run hedge funds that are money managers. There are also people who manage real estate, and they're have people investing in their funds because they own large amounts of real estate. Then you have folks who are investing in stock-based money managers. But one of the problems that comes up is if everyone is moving towards cash, why is it that a fund manager wants to pay an investment manager who's sitting in cash? Because Calpers, for example, could choose to simply sit in cash itself and not bother having anybody manage that money. Hence, the people who manage money have to put that money to work, which is one of the things I think is going on here right now. So my long-winded statement to say is, don't be surprised if we still have another 5 to 10% upside on Tesla's stock price while it's at a high number, only because its market cap is so large and represents such a large weighting in the indices that we could actually see this thing stay where it is or rise a little bit. I expect it to fall in that $10 to $20 to $30 range, but I think it could be higher. This brings up that whole issue of drop us a note if you'd like to learn about some options trading processes, because I think it would help make sure you preserve the gains you've enjoyed. And you don't have to be like those homeowners who lost 36% of their value and were unable to hedge those losses before the money went away. Once again, I want to thank you for the time. This is Greg for Teslafaninsight. Finally, our usual health tip: don't forget your 25 leg lifts a day. A 20-minute walk, very wise move for better cardio, etc. And prior to lovemaking, no more than a salad, highly recommended to allow blood flow to all the extremities rather than just to your stomach. Once again, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, hitro, oder harvestasite, ni hama, namaste, arrivederci. And in Jamaica, we say enough respect, walk, good man. Thanks for joining us.